the month of June was largely a factor of liquidity and global strength. I mean, there was not so much local news which in a sense really impacted the market. There was geopolitics, there was a lot of news which came again on the tariff front in terms of how smooth the negotiations were moving. So global, and then the big US bill. So the setting on the table, I think, is a function of global strength. Global strength is coming because global markets are convinced that in the near term there is abundant and more liquidity. Despite that liquidity, inflation is not moving up, and the tariff issue seems to be sorted, which in a sense has taken the markets higher to almost a new high for major markets which really matter. But as we migrate from June to July, which we've already done, the landscape will change. It will no longer be assumptions, liquidity. The market would be reacting to news flow. Of course, there are earnings, GST, and the final blueprint on where tariff is moving or tariffs are moving perhaps would be out. So unlike the month of June, where it was liquidity, it was geopolitical news, it was assumption that inflation will remain low, I think all of that will get challenged. So I expect that July would be dramatically different for global markets, and at least for our markets, considering that the whole narrative of the market would be based on facts and numbers and delivery rather than assumptions and perhaps opinions.